Hello, Jim here. I've been selling options as a great way to make some extra income, primarily to become financially independent and do the things I really want to do. Today, I want to share with you probably my best 2 days of the year. Monday and Tuesday were really good days. I'm going to share with you the trades I did on those days. I'm also going to talk about some strategies that have really worked well for me. So stay tuned. I think you're really going to enjoy what I have for you. Let's go ahead and jump right in. I do like to give a quick market update. The Fed is pretty much holding steady. I've talked about this in previous videos. I think they're going to keep rates higher for longer. They do keep coming out and suggesting that they are going to do a rate cut late in the year. So maybe in the October, September timeframe, they might. But I don't know unless things change. The economy seems to be doing pretty well. People are still spending money and going on vacation. So I don't know. They may not lower the rates at all, which isn't necessarily a bad thing. I do like the higher interest rates. Being able to earn around 5% on my cash has been really nice, and I wouldn't mind seeing that continue. Now, the other major impact we've had recently has been earnings. I've talked about it also in previous videos. CVS missed earnings, and other companies have made earnings and given bad guidance and just been hammered. I do think the market is a little bit more reactionary than it has been in the past, at least since probably 2021. If a company gives poor guidance, it just seems like they'll drop 10, 15, 20%. At least that's what I'm seeing. Now, I've sold a lot of or set up a lot of positions right before earnings. I'm going to be moving away from that. I just yesterday did an Airbnb trade, and they also had pretty good earnings, and they had okay guidance, and they also got hammered. So I'm going to, going forward, not make trades right before earnings. I might wait to the day after. Like today would have been a better day to probably do an Airbnb trade, being that they dropped, I think, around 8%. So, and I think that's going to continue. I got an email from Schwab, and it looks like settlement days are going to switch from 2 to 1 day, which will have an impact on the way the markets run. And then at some point, we're going to have 24-hour markets. Some of the brokers are already doing this. I believe Robinhood is doing this, where you can actually make trades after hours. So I think at some point that's going to be the norm. A lot of the financial firms probably don't want that to happen because, again, it's going to really mess up their work hours. Instead of being done at 4, they might have to, like a lot of other companies, structure different people working at different times. I do believe it is going to happen, and in some aspects of it, it'll be really nice, especially for a trader, being able to make trades when you want to make them, not being in a big rush to make them by 4 p.m. Currently, the markets are just 10:30 to 4, so I don't know if they'll go to 24 hours right away. I would probably think they would expand it, maybe, do 8 to 5 initially, and then at some point get to 24 hours. But we'll see. It may be broker by broker, or the markets in general may do it. The markets themselves may make that decision. But like I said, you can already do it on Robinhood. Now, I'm not saying go get an account with Robinhood. It's just interesting. I do have members in my membership who actually have done some after-hour trades with Robinhood, and they said it worked out. So let's jump into the main part of the content. So I start all my videos, and I like to share. That's what's been really important for me, being a long-term income investor. I've been investing since probably the mid-'80s. And even now, I'm still an investor. I'm not just an options income trader. I kind of look at it differently. So if your purpose is just to make income, and I do have people like that who have joined my membership or who are subscribers, and they just want to make some income by selling options or trading options in general. I don't really do that. I'm more of an investor. So it's part of my strategy. It's not all my strategy. I also look at dividends, interest. I also like appreciation in my stocks, and I always hope to pick up a great company at a really good price that's going to grow rapidly over the coming years, not just in the short term, but maybe, when you look back 5 years, the stock is tripled or quadrupled or something along those lines, kind of like what happened with Apple and Nvidia. And to kind of keep it really basic, it's so important to pick the right companies, so you have to do your due diligence. You have to be sure that they, are low in debt, they have good productivity, they have good earnings, and they also have year over year earnings, meaning they're growing and they're also growing with their earnings. And then also keeping up with them, because a lot of times things can change. We saw that recently with CVS, which I think kind of shocked the world with their really disappointing earnings. So it's really important to pick the right stocks, and in a lot of cases also to use ETFs. Probably a good 50% of my accounts are in ETFs, and they've worked out really well. I probably do more just covered calls. I will sell vertical put credit spread. Some of my favorites are XLE. I also like SCHD, DVY. There's several different ones that I typically like to work with. And I share these with my memberships. I have 2 watch lists. I have a stock watch list, my favorite stocks, and then also my favorite ETFs. And I share that with my memberships. And if you're curious about my memberships, look in the description. I have details. I have one that's currently closed. It kind of closes and then reopens as people come and go. Then I have another one. Both mine that relate to Discord are not free anymore. I still, on my least expensive membership, I give a week for free so you can try it, see if you like it. I don't want people to have to jump through hurdles. I want to keep it really easy. So if you like it, you like my style, then you might want to stay. But if it doesn't work out, it's really you haven't paid anything, and it's kind of a learning experience. Now, one thing I do want to mention is I've had a lot of people joining recently, and I have some very advanced traders that are now currently part of my membership, and they actually answer a lot of questions in Discord, and that's been a godsend. I thank them on a daily basis, again, because I'm still learning. I wouldn't put myself even as an advanced options trader. I don't know the technical stuff as well as a lot of the people who've recently joined. So if you're interested, take a look. And as always, please subscribe, hit that like button. I do like to get the word out. This is really a great tool that should be in your tool chest for learning how to trade. Now, some of the key things I did want to talk about, I mentioned here ownership or income. So again, if you're an investor and you want to own these companies, you're a certain type of trader. Now, if you're primarily doing stock options and trading options just to make income, then it's a different kind of trader. It's a different kind of investor, and depending on which one of those you are, you would have different strategies. So if you're just in for making some income, you probably want to take a little bit less risk. You want to get out of the trade sooner. And you may have a lot more strategies to potentially help you close the trades. If you're an investor, then you may do something more along the lines of the wheel. You may pick companies because you do want to own them, and then once you own them, you start selling covered calls. So it is different. And like I said before, I have a little bit of both in my membership. So it's made it interesting, and we can compare and contrast different trades, give feedback on different trades, and it's worked out quite well. Now, another thing I wanted to mention, and when I show the trades at the very end of this video, I've done what I call different flavors of iron condors. If you know what an iron condor is, when you're selling options, you typically will do what's called a spread. So if you're brand new to options, someone will pay you for the opportunity to buy your stock, and someone will pay you for the opportunity to sell you stock, and you can set up what's called a spread on both sides. So someone's paying you some nice income, but then you're also buying protection in the form of if the stock dives majorly, you're protected on the downside, or if the stock shoots through the roof, it's an Apple or it's a Nvidia and it goes up 100% in a couple of weeks, again, you're protected on the upside. If it gets above a certain price, you're protected because you purchased the call, or if it goes down radically because of missed earnings, you're protected on the downside. And that gives you a lot more opportunities, and buying both of those at the same time, especially on a stock that doesn't move that much, you can really make some good income. So one of the trades I did has a weird name. It's called the reverse jade lizard. And all in all, it's just the iron condor without purchasing the call, because you also own the shares. So you're already covered. You don't need to protect yourself on the upside, but you could still do that. But it's not necessary, especially if you have a lot of shares in a particular stock. So I'm going to talk a little bit about that, and you can kind of work with your iron condors. And there's also, I believe, I think it's called an iron butterfly. There's different flavors you can do. But I'm going to start doing more and more of those. I do find that they're very, very profitable, and they're a little bit less risky, especially with some of the stocks I like to trade. Another important point I wanted to share with everyone. So I moved all my retirement accounts to Fidelity, and then I have all my taxable accounts at Schwab. And I'm finding I'm beginning to trade very differently in the two, partially because, they're retirement accounts versus taxable accounts. You have a lot of limitations with retirement accounts, mainly because it's hard to get money in and out of there. You might be able to, if it's an IRA, put a distribution into it, but it takes time to do that. It's not something you can do quickly, especially if you run into trouble because of early assignment or something else that's gone on with your account. But the other part is, it seems like the brokers work differently. At Schwab, I've always taught I prefer to do market trades. Now I'm finding in Fidelity that I'm doing limit trades more often than market trades. And a lot of times they don't occur right away. I'll go off and do something else, and sometimes I don't realize till the next day that the limit trade has worked out. So a lot of times, if there's a bid and ask and there's a midpoint, I sometimes will take that midpoint or go a little higher. I'm like, well, I'm willing to roll this or make this trade if it's, profitable enough. So I'll throw a little bit, a higher bid at that. I want a higher price for this to go through. I want to be paid more. And lo and behold, it's occurred. And I haven't found that in Schwab as much. I haven't tried limit orders as much in Schwab, but I have tried a few times. And a lot of times I have to go back and redo it. And then in the end, I go back to a market trade. So I thought that was interesting. I didn't know if you guys have also run across that. The other reason I moved my accounts, all my retirement accounts, to Fidelity was the higher interest. And it's been a godsend. I mean, I'm on a monthly basis, just recurring, seeing big amounts of interest go in. It's been really nice. It's been given me the ability to really increase my returns quite a bit. So that being said, it may be something you want to consider. I've also left my old accounts open at Schwab if I ever want to move the funds back. Plus, I have the history in the old account. So, I like them both. I probably like Schwab a little bit better with how the site and Thinkorswim works. And then I like Fidelity a little bit better because of the higher interest. They're both provide really good support. You can reach people on the phone. So having the accounts at both also reminds me, by having all my retirement accounts at Fidelity, it keeps me in a retirement mindset. And then at Schwab, it's the opposite, mainly because I do almost all my banking now through Schwab. They really have some nice opportunities to pay bills. They also, have other features that you can work with. I believe they also will pay ATM fees. So if you want to do all your banking, and I believe they even have a pretty good credit card. So I wanted to share that. Now, next, what's really helped me is steady, slow improvement. So I try to learn from my mistakes, going back and being able to look at a trade, dig a little deeper. And now with having the community, having the membership, and I'll get some good feedback, and I'm always open to good feedback. So even with some trades I did recently that have been hit hard related to earnings, there's been a lot of discussions about that. Even the one I did yesterday, which was Airbnb, it's still out of the money, but like I said, it dropped 8%, we've had a pretty good discussion with that. So I'm looking at changing the way I deal with earnings. I'm probably not going to be doing trades before earnings. Now, I may do trades right after earnings. Like I said before, some good companies are really being hammered. It might be a really good time to get in, to sell a put right after they've been hammered because of earnings, as long as they're still a good company and nothing fundamentally has changed that you wouldn't want to invest in them anymore. And then, changing my guidelines, changing the way I do things, trying to improve. That's what I think is really key with this kind of trading. It can make a big difference. And if you go back to my original videos, I think almost 3 years ago now, my goals were much lower. What I was trying to do was, I wasn't getting the returns that I get now. And so it's been a steady improvement. And that's what I wanted to share with people. I have new members who come in all the time. And what I'm trying to say to them is to be patient, to learn. I also have some lessons set up that people can access. If you go to Easy Investing Income, which is my website, at the very top, there's 6 lessons on how I got started, and it kind of takes you through it. And I've updated them a couple times, but I share that. I've also got, group meetings where we talk about some of these kinds of things to try to have, like I said, steady improvement, try to become a better trader, because it's life-changing. It can really, make you financially independent, or the ability to retire early. I'm one of those that I probably will never completely retire early. Depends on how you look at retirement. To me, is I'll probably still be playing tennis, hopefully getting back into golf. I have cataract issues, so it's really hard to track the ball. And then just, being able to go on vacation when I want to, have time with my son, all the things I really enjoy. So just wanted to share that and how that's been really important for me. It's, and at times I'll get disappointed. I'll have a trade that goes against me. And, like everyone else, it's kind of like, oh, maybe I shouldn't have done that. But the worst thing you could do is quit or pull your money out of the market and stop investing in selling options. So let's jump into the next part of the video, and I'll share with you my trades earlier this week. This is my weekly planning worksheet. I've just made some modifications just to show the trades from Monday and Tuesday. I made a copy of it and saved it. So let's just jump through the trades. I typically will do 1 to 2 trades a day, probably more like 1 or 1.5 trades if you averaged it out. So doing 5 trades in 2 days, it's quite a bit. So the first trade was ACLS. This is a chip maker related to the EV industry, and it's a good company. It does well. It's not way overpriced. At the time, its current price was $112. Originally, I believe it was a 120, 110 spread, but I did widen the spread and lowered the strikes at one point when it was fairly deep in the money, and I wasn't quite sure what I wanted to do with it. I do like it better at this short strike. So what I did with this roll was, and I rolled it out to 621, and I kept the same short strike, but I did increase the outer strike. So I thinned out the spread. It's now a $15 spread, meaning the required capital is $3,000, not $4,000. And all the premium I brought in since I first started this trade is $1,113, which that's, I believe, primarily three trades. So the initial opening, and then this is the second time I've rolled it. So I've been able to bring in pretty close to this amount every time. So right around between 330 and 360 or something along those lines. Now the required capital, I'm using the premium for this trade. So the 3,000 minus the 329, and it's a 97.8% return. Now this trade is still open. It could go against me, but I still like to measure the yearly ROI. And the interesting thing about this is I thinned the spread, so it worked out nicely. So next is AMD. I've been trading AMD not that long, ever since April 12th. I also did this one on Monday in my Fidelity IRA, a vertical put credit spread roll, 145, 135. I kept the same strikes this time. At the time, it was 155. And I rolled it to 621. So I literally just rolled it out a month. I prefer the third Friday of the month for most of my expirations. So the total premium for this trade since the very beginning is 663. So just like the previous one, I brought in about 330 each time, or three. I think last time it must have been 333 and about 40 cents or something. So it's worked out really well. The capital required, because it's the $2,000 minus the 330.59. And it's like 157% return. And I believe it was pretty close to that the first time I did it. And what's interesting to me, again, is the similar amount for the roll. If I can earn this kind of money, I don't really worry about assignment. I'm like, well, that's kind of a no-brainer. If I can bring in that much cash in a short period of time, it's well worth doing. Next is Devon. This is kind of like my CVS trade. It was deep in the money at one time. It got assigned to me. And now it's come back nicely. The whole energy sector's come back nicely. So I rolled it. Originally it was 47.50. So even at 47.50, I had some pretty good profit with it. It was expiring on May 17th. It was 51.22, and I rolled it to 52.50, and I went out pretty long way, March 21st, 2025. I brought in 297, which is a lower return, but it's still nice to get that kind of a return. You can see my cost basis is right around 43. So if it gets assigned away from me at 52.50, I've made a really good return. And even with this, when I calculate the yearly ROI, it's still 3.91%, which is, I think it's really close to the dividend rate. I believe they pay around a 4% dividend. So it just about doubles the dividend, which is really nice. So that's the third trade. Those are the three trades I did on Monday. Next is CF Industries. This is a mineral company. I started this trade back in February. Expiration was also on the 17th. These are all, well, the last one was a new trade and it's 621, but I rolled this out. It was 74.60, so it was a bit out of the money. And I rolled it to 816. And the reason I went out to 816, there were no July expirations, and there wasn't enough cash for June. So I did go out a little bit farther. I stuck to the 72.65. So the spread's a little bit less at 750. And I had brought in, all the premium was 1001, again, from the very beginning with my first trade. That was a request by one of my members, and that I added. They wanted to see how I had done from the very beginning. So again, I'm using, for the capital required, the 1500 minus the 326.49. And this was like 100% ROI, again, for people who are like, well, this isn't a closed trade. This is definitely still an open trade. So it could go against me, but most of my trades don't. So hopefully I'll be able to close this, or it'll get assigned to me. And I do like the price, and it does have some good covered call premium, and it pays a good dividend. I believe it pays right around a 4% dividend, maybe a little bit higher, and it grows its dividend nicely and has plenty of cash for it. Next is Zoom. Zoom is one of the companies I like to trade the most. This was one contract. This is kind of a unique trade. It's called the reverse shade lizard, which is just a fancy name for an iron condor without purchasing the call protection. So here you can see I sold a 60 put with the outer put of 55. And at the same time, I sold a $65 call, and I didn't buy, an outer call because I already own 100 shares. And the cost basis is really good. I think the cost basis on these is like $62, $63. So if it got called away, I'd be doing pretty well, especially at 65. So I'd have a pretty good return. And I did this expiration on 621, so like a 45 DTE. It was 62.50, and it's still, I think, about the same price. and I brought in $413. This is where this trade gets a little weird. So the fact that I typically for iron condors will look at the put side and then to figure out the required capital. So the 55.60 is a $5 spread is for one contract. So it's like $500. But the fact that I'm bringing in 413, it's like my cost of capital is 86. Then my return yearly ROI would be 39.02. I don't know if I agree with this calculation, but that's how I typically have done it. If I did a vertical put credit spread, it still would be a very good return. I think about half of the premium is related to that, so it would probably still be a pretty good return, maybe over 200, because again, it's a what was it, a $5 spread? Yeah, it's a $5 spread versus a 10. So this is kind of a unique trade for me. Now, if I use the cost basis of those shares, then it's more like a 57% return. So it's a new trade for me. I've done a few of these, primarily with Coca-Cola. This is the first time of doing it with Zoom. Zoom typically has really good premium. And like I said, I like working with Zoom. I like Zoom. I currently now own 200 shares, but I want to own at least 400, so I'm looking to pick up some more. So here's how and I say weekly total, but it's really 2-day total. So I made $16.97. The daily average was $8.48. The trade average was $339.50. So that's, in one of my last videos, I did the average, and that's right on what I think I did in that video. So on Monday, I did $957.07. And Tuesday also was really good, $740.45. So what it's allowed me to do, like I haven't done a trade today. It's Thursday, May 9th. I think I've closed. Actually, that's not true. I closed 2 positions. So I'm trying to be a lot more diligent in closing existing positions. I closed the position in Apple and I believe in Logitech. So, being able to do that kind of money in just 2 days makes the rest of the week a lot easier. I may not do a new trade today. I may just do one more tomorrow, depending on what happens with the market. I did look at the top, I did change my goals. They are now 2,000 weekly and 8,000 monthly. This week it's going to be difficult because of the loss related to CVS, but I had a really good week last week, and then so far this week has been good. So maybe I will reach that goal. It'll be interesting. I wouldn't be surprised though if I miss it by $500-600 or something along those lines. So that's what I wanted to share with you guys. I didn't know if you have any comments, concerns, you don't agree with me. Please leave a comment. I typically try to answer them within 24 to 48 hours. And if, I do appreciate that. I like having the back and forth, and I like having the communications. Or if you want to take a look, like I mentioned earlier, and take a look at my memberships, I do. There's a lot of conversations about a lot of these trades, and it's worked out well. I'm not a pro by any stretch of the imagination, so I'm learning as I go. And having some new members recently that are pretty advanced traders, the communication back and forth has gotten really interesting. So thank you for joining me, and look forward to seeing you next time.